Agarwalji, you can
Okay.
start your session. Thank you very much. More may join slowly, but by the time you upload your PPT.
Now, is the PPT visible?
Yeah.
Yes, sir.
And no problem like the previous one session? It is visible properly?
Yeah, it's visible. It's visible. Yeah.
Yes, sir.
Okay. So, can I start, Rajan sir?
Okay, you start because it's already 12:05. So 12:04, you can start, sir.
Okay. Thank you, Ajahn Saab, and good noon, friends. So today for 1 hour, we will be talking about Unit 25 of your second paper, that is Bank Financial Management. This relates to NPA, income recognition, asset classification, and provisioning. One thing, because your this module D of paper ABM, this also has a topic as NPA included therein. So whatever we will be talking here, it is relevant to some extent for your paper 1 also. So coming to the subject, how do we define NPA? Because all our assets, loan assets, they give us some income, they generate income. But in case of NPA, income is not generated. So an asset, including a leased asset, becomes non-performing when it ceases to generate income for the bank. This is the broad definition for non-performing asset. So first thing which we have to be well conversant with is how do we identify an NPA? We have got term loan account, we have got CCOD, bills account, right? So in case of term loan, the identification of NPA is done like this. A term loan account will be NPA if interest and or installment of principal remains overdue for a period of more than 90 days. So it has to be overdue, and this overdue period should be more than 90 days. Overdue means not paid on due date. Now, one example has been included here. This is your question 1. Suppose due date of payment of term loan installment is today, that is 5th September 2021, and it is not paid fully. Even if it is partially paid, it will attract this NPA classification norm. Only when it is paid fully, then it will continue to remain a standard. So in this particular case, we have to calculate the date of NPA. So due date is 5th September, then first overdue date is 6th September 2021, tomorrow. That will be my first overdue date. Now I will count 90 days from tomorrow onwards. So for the September month, it will be 25 days. For October, 31 days, November, 30 days, and December, 4 days included. It adds up to 90 days. So 4th December will be the 90th day of it being overdue. And more than 90 days means next date. So the date of NPA will be 5th December 2021. We should be very clear in the calculation of date of NPA. Another example has been taken. If the due date is 24th February, then first overdue date is 25th February, 90th day will come to 25th May, and date of NPA will become 26th May 2021. Now this was the case for a term loan account where the amount is disbursed, it is not a running account, and thereafter borrower repays it at monthly, quarterly, half-yearly intervals. But in case of cash credit OD account, they are running account. The debits are frequent, credits are frequent. So here the criterion is slightly different. A CCOD account will become NPA if it remains out of order. And when it becomes out of order, if the outstanding balance remains continuously in excess of sanction limit or drawing power, whichever is less, for 90 days. Whenever we sanction a CC limit, there is a sanction limit. Thereafter, we calculated drawing power. If my drawing power is below sanction limit, then I have to see what is the outstanding balance vis-a-vis drawing power. And if drawing power is more, then I have to see outstanding balance vis-a-vis sanction limit. So when my outstanding balance remains continuously in excess of sanction limit or drawing power, whichever is less in these two, for 90 days, the account is treated as out of order, and this will become NPA. There may be few instances where outstanding balance is below limit or DP, but there are no credits continuously for 90 days as on the date of balance sheet. Even then, this account will be classified as NPA. Or if there were credits, but they were not sufficient enough to cover the interest debited during the same period. In this case also, this CC or OD account will become NPA. So here an example has been taken. My CC account is first overdrawn today. First date of overdrawn is 5th September 2021. So I will calculate the 90th day. That will be 3rd December, and date of NPA will be 4th December. The distinction between CC and OD is like this. If TL installment is due today, then overdue first date is tomorrow. But in case of CC, if it is overdrawn today, so my 90th day will start from today itself. In case of term loan, my 90th day will start from tomorrow. That is the distinction between the two.
Sir, can you please explain again, sir?
Let me tell you. In case of term loan, if my installment is due today, then my first day of it being overdue will be 6th September tomorrow. And from tomorrow onward, 6th September, I will count 90 days. In case of CC, if my account it exceeds drawing power today, then first date of out of order is today itself. I will count 90 days from today itself, not tomorrow. That is the difference. Is it clear, sir?
Yes, sir. Yes, sir. Thank
you. Besides these financial factors, there are two non-financial reasons also due to which a CC account or a OD account can become NPA. We all know that CC account limits are sanctioned for 1 year normally. Okay. These are regular CC limit. They are sanctioned for 1 year. So if I sanction a limit today, 5th September, I release it. Then on the 5th September of next year, that is 2022, it must be renewed or reviewed. And if it is not done, then there is a chance that this account becomes NPA. When it will become 180 days from 5th September 2022. Today I have released a limit, 5th September 2021. Its due date of renewal is 5th September 2022. And from that date, 5th September 2022, if 180 days are elapsed and it is not renewed or reviewed, then this account will become NPA. In case of ad hoc credit limit, sometimes we accommodate borrower by giving some additional credit facilities, CC limits, to meet his urgent requirements. So suppose I have sanctioned an ad hoc limit today. Then within 180 days from today, it should be regularized, either regularized or it should be merged with my regular limits. And if it is not done, then this account will become NPA. So kindly remember that in case of regular limits, this 180 days period will start from the due date of renewal. That is 1 year from now. In case of ad hoc limit, This 180 days period will start from the date of sanction of ad hoc limit. Another reason by which CC account can become NPA is when we allow operations on the basis of old stock statements. The outstanding in the account based on drawing power calculated from stock statement older than 3 months are deemed irregular. And if such irregular drawings are permitted in the account for a continuous period of 90 days, this account will become NPA. I will explain it with an example. Normally, the periodicity of stock statement is monthly. Suppose the borrower submitted last stock statement as on 30th April 2021. 30th April. So this statement must have reached the branch in the first week of May. Then we enter the necessary details in our system. Drawing power is calculated. And when on the basis of this stock statement, if we allow operations in May, June and July, these operations will be regular operations. No problem. But after 3 months, that is from 1st August 2021, the operations will be deemed irregular. Provided he has not submitted May statement, June statement, July statement, right? The last stock statement was submitted as on 30th April. Thereafter, no stock statement has been received. In that case, the operations in this account with effect from 1st August 2021 will become irregular. And if such irregular drawings are permitted for 90 days, then this account will become NPA. So from 1st August, I will calculate 90 days. So 31 days of August, September 30, 61, and 29 days of October, make 90. So next date means 30th October 2021, this account will become NPA. Objective question, which the type of objective question which are usually asked is like this. The outstanding in the account based on drawing power calculated from stock statement older than blank are deemed as irregular. A working capital borrower account will become NPA if such irregular drawings are permitted in the account for a continuous period of so many days, even though the unit may be working or borrower's financial position is satisfactory. There is no other irregularity. So first blank will has the answer 3 months, and second blank has the answer 90 days. 3 months and 90 days. This will be the answer. So my option will be D. In case of bill, every bill has got a due date. The bill purchase or discounted account is a NPA if the bill remains overdue for a period of more than 90 days. Very simple. In case of credit card dues, we spend money on credit card. We get our monthly bill. Usually it is on monthly interval. We get the bill. There is a minimum amount due written on it, and there is a due date written on it. So after receiving the statement, I do not pay minimum amount due within 90 days from the payment due date mentioned in this statement, my credit card account will become NPA. Somewhere because older RBI guidelines were like this, the minimum amount due was permitted to be paid within 90 days of next statement. So kindly in some books or in somewhere you may find this next statement, 90 days after next statement. No, it is incorrect. Now the latest and the guidelines which are in force today, it is 90 days from the current statement only. So whenever you receive any statement, the due date is mentioned, and if within 90 days the minimum amount due is not paid, this account will become NPA. In case of agricultural advances,
Sir, one question.
yes, sir.
Sir, from the due date of the minimum amount or from the due date of statement received?
No, there is only one due date written there. Either
Yeah.
you can pay the total amount due or you can pay the minimum amount due. If you pay the total amount due, no charges are levied on you, like finance charges or interest or late payment fees. But if you pay minimum amount due, right, then
Yes, sir.
certain charges are leviable. They are levied. They will not charge late payment charges, but they will recover you the finance charges, interest on unpaid amount. So
So
the
90 days from the due date.
due date is only one. In any credit card bill, the due date is only one. You have got two options. Either you pay, you don't pay, or you pay minimum amount due, or you pay total amount due. So if you pay total amount due, everything is over, no problem. And if you do pay minimum amount due, then even then certain charges are leviable. But then in that case, this account will not become NPA. If you pay MAD, minimum amount due, before the end of 90 days from the due date. But if you do not pay the minimum amount due, or if you do not pay any amount, then this account will become NPA. Besides, it will attract certain charges from the credit card issuer.
From the 90 days. Sir, I'm asking from the 90 day, from the due date up to 90 days.
Look, gentlemen, this 90 days is permissible only for the purpose of NPA categorization. As
Okay,
far
okay.
as charges are concerned, you have to pay by due date, on or before due date. But if you do not pay on or before due date, and if you pay on or after 90 days, then this account will become NPA. And not only this account, your other accounts will also become NPA. So 90 days time limit is relevant only for the purpose of NPA categorization of credit card dues. Otherwise, your due date is only relevant whatever is written in the credit card statement.
Okay, sir.
Am I clear?
Yes, sir. Yes.
As regards agricultural advances, friends, a term loan granted for short duration crops will be treated as NPA if money remains overdue for 2 crop season. Short duration, 2 crop season. For long duration, if it is overdue for 1 crop season. And long duration crops are where crop season are longer than 1 year. From harvesting, from sowing to harvesting, it is longer than 1 year. And the crops which are not long duration crops, they are all short duration crops. This criterion is applicable only to loans for crops, agricultural implements and machinery like tractor, pre and post harvest activities, pledge hypothecation of agricultural produce up to rupees 50 lakh only, or under KCC, to individual farmers or to corporate farmers or to farmer societies. For all other type of loans, agricultural loans, like your animal husbandry, for example, our usual 90 days criterion will apply. Only those type of agricultural advances whose recovery is dependent upon the realization of value of crop, they are governed by this criterion. Another type of advances are guaranteed accounts. Guarantee is coming from central government or state government. If an advance has been guaranteed by central government, then certain relaxations are there. If this account becomes overdue, even then this account will continue as standard asset under one condition, that the central government does not repudiate its guarantee when invoked. When the bank invokes the guarantee, the central government has not rejected the guarantee or has not denied the guarantee. I'm taking a little 1 minute break because there are heavy rains. Let me close the door, etc. Please. I hope the sound of falling rain is not disturbing you. Hello?
No, sir.
Okay. So in case of advances, if I have made some advance to a government company or some borrower, and this advance has been guaranteed by central government, so this account will remain standard. It is known as standard asset GG, government guaranteed. The only condition is that when the guarantee is invoked, the central government does not deny its liability under the guarantee. But this exemption is for asset classification purpose and not for the purpose of income recognition. It means for purposes of income recognition, it is as bad as an NPA. That interest on such advance is not to be taken to income account if it is not realized. That means on accrual basis, the interest income cannot be taken to income account. Only on realization basis, we can book income. Please note that the guarantee by ECGC is treated as guarantee by central government. Sometimes you may have some questions where they will say that the account is guaranteed by ECGC. Then you have to treat it as it has been guaranteed by central government. Now, as against the guarantee by central government, if the advance has been guaranteed by a state government, then usual 90 days norms will apply. Here there is no relaxation at all. So the multiple choice question can be like this. Bank has given loan to a borrower against central government guarantee. Loan is overdue for more than 90 days. So will be treated as NPA? No, it will not be treated as NPA. It will be treated as NPA only if guarantee is invoked and guarantee is not honored. Yes, here it will be treated as NPA. If the government honors, government accepts its liability under the guarantee, then it will be standard GG. And C, both are true, D, none are true. So my answer is B. It will be treated as NPA only if guarantee is invoked and guarantee is not honored. Next question is state government guaranteed loans and investment in state government guaranteed bond will become NPA where interest and or installment of principal etc. remains overdue for a period of more than 90 days. That is option A. Remaining options are incorrect. So my answer will be A. Very often, rather most of the time, we make advances in the shape of demand loan or overdraft against the securities, liquid securities such as fixed deposit receipts, NSCs eligible for surrender, IVP, KVP. We make advances against NSCs, whether they are eligible for surrender or not. We make advances. IVP, Indra Vikas Patra, Kisan Vikas Patra, life insurance policy, etc. But this identification of NPA, where there some relaxation is granted, it is applicable to NSCs which are eligible for surrender. When the NSC become eligible for surrender on maturity or on death of the NSC holder or on forfeiture by government or when ordered by a court of law. Only these 4 conditions are there. Under any one of these conditions, this NSC will become eligible for surrender. So when we make an advance against such securities, they need not be treated as NPA, although interest thereon has not been paid for 90 days, provided adequate margin is available. So adequate margin means the loan value should be less than security value. With passage of time, my loan amount also increases because of application of interest. At the same time, my FDR's value or NSC's value or surrender value of LIC policy, they also increase with passage of time. So long as loan outstandings are below the value of security, I will say that adequate margin is available. Then, even if the interest has not been paid for 90 days, these accounts will not be treated as NPA. Therefore, when these are not treated as NPA, then interest on such advances may be taken to income account on the due date on accrual basis. One thing which we have to remember, this exemption is not available to government securities, mutual funds and gold ornament. Loan made against government securities, many UP state security, UP state bonds are there, Kerala bonds are also there, mutual funds are there. And if we make advance against the pledge of gold ornament, then this is not available. This relaxation is not available. In case of consortium advance, there are more than one bank in multiple banking, in consortium advances or in syndicate loans. More than one bank has made advance to a particular borrower. So here each bank has to see what is the record of recovery at his bank. Each bank may classify the borrower account according to its own record of recovery and other aspects having a bearing on the recoverability of the advances, as in the case of multiple banking arrangement. Question is, asset classification of account under consortium are based on the record of recovery of individual member banks. It is not based on the record of recovery of lead bank or all banks, banks with 75% share by value. These are options at B, C, D, they are incorrect. So asset classification of accounts under consortium is based on record of recovery of individual member bank. So my answer will be A. Another question is that bank A and B have allowed loan on consortium basis. Loan is irregular with bank A for 120 days and with bank B for 18 months. So the asset classification of account shall be what? Because it is irregular for 120 days, means more than 90 days, and beyond 90 days it has been irregular for 30 days only. So for 30 days it has remained substandard. For next, for the other bank B, it is irregular for 18 months. So for first 12 months of irregularity, it is substandard. For next 6 months, it is doubtful. So my answer is substandard with bank A and doubtful with bank B. Option B is the correct answer. One thing I would like to highlight, okay, we will deal it later on. Okay, let us move ahead. Income recognition. Whenever an account becomes NPA, what we do, we stop application of further interest. And in future, income will be recognized on actual, when it is actually realized only. Income from NPAs is not recognized on accrual basis, but is booked as income only when it is actually realized. So after date of NPA, I do not apply interest on contractual intervals, like monthly or quarterly or half yearly, whatever it is. Only when some recovery is there in the account, then I will debit the account and take it to the income. However, interest on advances against term deposit, NSCs, KVPs, IVPs, life insurance policies may be taken to income account on due date, provided adequate margin is available in the account. That we have seen already. That in such liquid securities, income can be, because income can be taken to, interest can be taken to income on accrual basis, provided adequate margin is available. If adequate margin is available, these accounts remain standard even if interest is overdue. So they remain standard, therefore income can be booked. Similar to interest, similar treatment is to be given to fees and commission. Fee and commission as a result of renegotiation or reschedulement of outstanding debt should be recognized on accrual basis over the period of time covered by renegotiated or rescheduled extension of credit. Another thing which we have to do when an account becomes NPA is that the entire interest accrued and credited to income in past periods should be reversed or provided for if the same is not realized. This is known as de-recognized income. We all are having this concept of, we are well conversant with the concept of de-recognized income. Suppose an account becomes NPA today, 5th September 2021. Then I will see the statement of account for the past periods. I will see what are the debit of interest, all the interest amount debited during the past period, not only 1 year, 2 year, all the past interest debited. I will add up. Then I will see what are the credits in the same period. If my credits are more than the interest debited, there is no DI. If my credits are less than the interest debited, then the difference is to be taken as de-recognized income. What I have to do? I have to debit my income account and credit sundry provision NPA. Or I have to make equivalent provision. I can also do one thing, that I debit my income account and credit the account itself. So this will depend upon the guidelines of individual bank. The underlying principle is that when an account becomes NPA, the past interest, if I have credited in my income account on accrual basis, I have to see, and only that income I have to depend upon which has been actually realized. If there are some portion which has not been realized, then I have to reverse it and I have to provide for it. Now, how this asset classification depends upon aging. The date of NPA, from date of NPA, first 12 months it will remain substandard. Next 12 months it will be doubtful first category, DB1. Next 24 months it will be DB2, doubtful 2 category. And thereafter for indefinite period it will remain doubtful 3 category. Please very carefully remember it. Sometimes they ask question like this: time elapsed after date of NPA. If 12 months have passed from date of NPA, then this will become DB1, right? If 24 months have passed from date of NPA, that is from this date to 24 months, then it will become DB2. If 48 months have passed from date of NPA, it will become DB3. The question can also be asked like this: if it remains doubtful for more than 12 months, it became doubtful at this point of time. If it remains doubtful for more than 12 months, it will become DB2. If it remains doubtful for more than 36 months, it will remain DB3. So there can be different permutation combination in framing the question. For how much period an NPA account remains substandard, after which it is classified as doubtful asset. So first 12 months it is substandard, thereafter it becomes doubtful. So my answer is A, 12 months. This is the period when this NPA account remains substandard. It will remain substandard for 12 months and thereafter it will become doubtful. Because of aging, an account never becomes loss. An account is categorized as loss asset only when there is loss of security. So where loss has been identified by bank auditors RBI inspectors, and the account is existing in our book, then this will be treated as loss asset. Wherever any security is available, ECGC cover is available, CGTMSE cover available, any other cover is available, then this account is not to be treated as loss category. Please note it. So only when there is no security or less than 10% security, then this will be loss asset. This slide is very important for you friends. Please pay attention to it. Suppose date of NPA is 5th September 2021, today's date. Then this account will be substandard from 5th September 2021 to 4th September 2022. It will be DB1 from 5th September 2022 to 4th September 2023. So for 12 months it will be substandard. For another 12 months it will be DB1. Then for 2 years it will remain DB2, and thereafter it will be DB3. Now, if they ask you to calculate provision on 4th September 2022 on this date, then you have to calculate provision as applicable or on the rate as applicable to substandard advances. But on the other hand, if they ask you to calculate on 5th September 2022, then you have to apply rates which are for DB1 category. So please remember very carefully. Just seeing 5th September 2022 and seeing that it is okay, it is 1 year from today, and you apply substandard rate, your answer will be incorrect. This you have to very carefully remember. This is one very comprehensive slide which will tell you when this account becomes standard, SMA 0, SMA 1, SMA 2, and so on. So the question is a car loan. This question may not be asked in your examination, but this is important for your understanding point of view. A car loan was disbursed on 15th February 2018. Its monthly installment due on 15th June 2018 was not paid on due date or even thereafter. How the asset classification will move from one stage to another. So first let us calculate the Npa date. Installment was due on 15th June. So first overdue date is 16th June. And as we have seen earlier, we can calculate the date of Npa. And in this case, date of Npa is 14 September 2018. Means till 13 September 2018, this account will be standard. 13 September 2018. And thereafter it will be Npa. So because no installment was due till which time? 15th June. So it will be 15 February to 15 June, it will remain standard and regular. The installment was due on 15 June and it was not paid. So from 16 June to 15th July of 2018, it will be standard, but in SMA 0 category. 1 to 31 days. 30 days. 31 to 60 days, it is SMA 1. And 61 to 90 days, it is SMA 2. So we can see that from 16 July 2018 to 14th August, it will be SMA 1. 15th August to 13th September, it will be SMA 2. Then from 14th September 2018 to 13th September of next year, 2019, it will be substandard. And thereafter, it will be DB1 for 1 year, DB2 for 2 years, and DB3 for unlimited time. So this will help you to understand how the account, a standard regular account becomes SMA 0, 1, 2, and thereafter substandard DB1, DB2, and DB3. Question 12 is, a CC account has been continuously irregular since 14th July 2020. As on 31st March 2022, it will be classified as what? So first we have to calculate the date of NPA. It is continuously irregular since 14 July. So July 18 days, August 31 days, September 30 days, and October 11 days. They add up 90 days of irregularity. So my date of NPA is 12th October 2020. So it will be substandard from 12th October 2020 to 11th October 2021. It will be DB1 from 12th October 2021 to 11th October 2022. And because my March 22 date falls between during the period when it is DB1, so my answer is DB1. That is option C.
Sir, one doubt, sir.
Yes.
Sir, irregular, CC account being irregular or out of order, what is the difference in this?
Irregular means its balance outstanding is more than drawing power or sanction limit, whichever is less. So it has become out of order. Hello?
Sir, if it
Are you getting me?
out of order means NPA, no, sir?
Out of order means NPA. And out of order is, it is out of order only when the balance outstanding exceeds sanction limit or drawing power continuously for a period of 90 days. So it became irregular on 14 July 2020. So my first day of irregularity is 14th July of 2020. Then my 90th day of irregularity is 11th October. So next date, 12th October, it will become NPA and out of order also. And there, with reference to that date, it will be substandard in up to 11th October 2021 and DB1 as on 31st March 2022, which shall be my answer.
Okay, sir.
So there is one more criterion when an account can become doubtful or loss. This is erosion in value of security. Wherever realizable value of security becomes less than 50% of the value assessed by the bank or accepted by RBI, account to be straight away classified as doubtful asset. So when the realizable value of security becomes less than 50% of the value, whenever we accept, I mean, if it is, for example, if I have made an CC and I have made an advance against a stock, last time I checked the stock, they were okay. But when next time when I go there, then I find that my stocks have depleted by more than 50%, then this account will become doubtful. As against this, if my realizable value of security is less than 10% of outstanding balance, this account will be classified as loss asset. So two distinctions are to be made. In case of doubtful, this 50% is vis-a-vis the value of security. And in case of loss asset, this 10% is vis-a-vis outstanding balance. It is less than 10% of outstanding balance, then it becomes loss. If it is less than 50% of the value accepted by me last time, then this account will become doubtful. Another thing which I highlighted earlier also, less than 10% means value of 10 is not there. Value up to 9.999 so on, but 10 is not there. Up to 10 means 10 is there. Up to 10 or not more than 10 is same thing. So value of 10 is included. So there multiple choice. They will be giving some phrase like less than 10, up to 10, more than 10. So you should not get bogged down in it. So I have given one example. After erosion of security in a standard loan account, if the realizable value of security becomes how much of outstanding balance, it will be classified as loss asset. We know it is less than 10%. So all the other options, 10% or more, even if it was written up to 10%, then this it would have been incorrect. Option of up to 10% would have been incorrect. Only less than 10% is the correct option in this case. We have already seen it. No problem. Now this table is very important. Provisioning norm. Standard asset, substandard, doubtful loss. How the provision calculation are to be made. In case of a standard asset, direct advance to agriculture and SME sector, they attract provision of 0.25%. SME here means not a small and medium, but a small and micro. Please remember, it is a small and micro. So it can be SME, small and micro. It can also be written as MSE, micro and small. Medium is not there. That you have to remember. Then commercial real estate sector, it is 1%. Commercial real estate, we know, hotel, shopping malls, cinema complex, all these things fall under commercial real estate sector. They will attract provision of 1%. If the standard asset is in commercial real estate residential housing sector, it will attract provision of 0.75%. What is CRE residential housing? There is some integrated complex where residential apartments are also there, shopping complex or cinema or school, it is also there. The only condition is that my commercial area should not exceed 10% of the total FSI. The commercial area should not exceed 10% of total FSI. It means the bulk of the FSI is occupied by residential apartment. If such is the case, then this will attract a provision of 0.75%. Housing loan at teaser rates, this will be 2%. What teaser rate, what does it signify? Sometimes banks, to attract new customers, they offer housing loan at concessional rate, vis-a-vis their card rate for 1 year, for 2 years, for limited period of time, and thereafter switch over to normal rate. So for the period, for the duration, when the housing loan is given at a concessional rate, this loan will attract a provision of 2%. And the moment it is shifted to normal rate, what will happen? If I shift this to normal rate today, then I will watch its conduct for next 12 months. It should continue to remain 12 standard. Till such time, I have to apply 2% provision. I'm again repeating. The normal rate will apply after the rates are reset to normal rates after 12 months from this date. Now, I give you an example. Suppose I sanction a housing loan today at a teaser rate for 1 year. After 1 year, I reset to normal rate. So after resetting, even after resetting for next 12 months, this higher provision of 2% will be applicable. 2% will be applicable during the duration when it was at a concessional rate, and it will also be applicable during first 12 months of normal rate. Only thereafter I can make a reduced provision of 0.40%. Now, in case of substandard account, normal provisioning is 15% of my book outstanding. Normal substandard account, there was a car loan, there was a housing loan, there was other machinery loan. Okay, where security was existing. But sometimes we make advances where there was no security, like bill purchase or personal loan. Or there can be some advances where realizable value of security was not more than 10% of the outstanding exposure. Here the word is not more than 10%. Please remember, in loss asset category was realizable value of security less than 10% of outstanding balance. There it was less than 10% of outstanding balance. Here it is not more than 10% of outstanding exposure. If such an advance becomes substandard, then it is known as unsecured substandard advance. And here we have to make provision at the rate of 25% of book outstanding. If my unsecured substandard advance is in infrastructure sector, then I have to make provision of 20%. So for substandard, there are three categories: 15 normal, 25 and 20 for unsecured substandard advances, 20 is for infra, 25 is for non-infra. In case of doubtful asset, till now in case of doubtful asset, I have to see how much outstanding balance is covered by security, both primary and collateral, and how much balance is unsecured. So unsecured portion will be attracting 100% provision in all the three cases, doubtful 1, 2, 3. For secured portion, doubtful 1 will be having 25% provision. Secured portion of doubtful 2 will be having 40% provision. In case of loss asset, we have to make 100% provision. Now, provision coverage ratio, some question may be asked. So bank have to ensure that their total provision coverage ratio, including floating provisions, is not less than 70%. With reference to the gross NPA position as on 30th September 2010. Because most of the banks started defaulting, so the Reserve Bank made some concession that whatever your gross NPAs were on as on 30th September 2010, please ensure that you have a provision coverage ratio of 70%. Now, what does this provision coverage ratio mean? We are having NPAs in substandard, DB1, DB2, DB3 and loss. Every account, I will calculate their book outstanding. So that will become gross NPA. In every account, I will add up the provision held. Somewhere I will am having 15% provision, 20%, 40%, 100%. I am having different provisions. I will add up the total provisions against my NPAs. So total provisions against gross NPAs divided by gross NPAs in percentage term is my provision coverage ratio. And this should not be less than 70%, the Reserve Bank says. So example is from the date of sanction, if the security value is how much of the sanctioned amount, on becoming NPA, an account is treated as substandard unsecured. So here it is not less than 10%, it is up to 10%. That I want to highlight. From the date of sanction, if the security value is up to 10% of the sanctioned amount, so this account, when it becomes NPA, this will be treated as substandard unsecured account. An account has been doubtful for 2 years. What is the percentage of provision required to be made on secured portion? So it has been doubtful for 2 years. For first year, it was in DB1 category. For next 2 years, it is in DB2 category. So this period will fall in DB2 category. So secured portion, again secured portion, I have to make 40% provision. My answer will be B. Now I come to the actual calculation. A CC account became overdrawn on 22nd January 2020. Present balance outstanding is 10 lakh. What will be the provision as on 31st March 21 if the value of security is 7 lakh? So first I will calculate my date of NPA and find out what was my asset classification on 31st March 2021. It is substandard. So the provision will be 15% of 10 lakh, that is 1.50 lakh. When the account is substandard, I have not to give any consideration to the value of security unless it is unsecured substandard advance. So even if here the value of security is given 7 lakh, it is just to confuse you. Only relevant is that amount outstanding is 10 lakh and I have to apply 15% provision. So the answer will be 1.50 lakh. Next question. Account of Messrs ABC has become DB1 with balance of rupees 6 lakh. The collateral security is 3 lakh, primary security is 1 lakh, guarantor's net worth is 10 lakh. What will be the provision? Now this question has been included in my presentation only to highlight this fact that guarantor's net worth is irrelevant as far as calculation of provision is concerned. Now you see the value of security. Primary is 1, collateral is 3, total is 4 lakh. So this will be my secured portion. Balance is 6 lakh. Secured portion is 4 lakh. So unsecured portion is 2 lakh. Account is DB1. So secured portion, 25% of secured portion and 100% of unsecured portion. So 25% of 4 lakh, 100% of 2 lakh. Answer will come. The provision will be, amount will be rupees 3 lakh. Advances covered by ECGC, CGT, MSE, CRG, FT, LIH guarantee. In case there is some advance secured by this guarantee, how do we calculate provision? That is the question. And your question will be like this only. The advance will be covered by guarantee and they will ask you to calculate the provision. So we can understand better by this table. Please very carefully remember this. There is some balance outstanding. Thereafter, I have to reduce value of security. I will come to unsecured amount, A minus B. Thereafter, I will apply the CGT, MSE, ECGC percentage. What I want to say is, you have not to apply ECGC percentage on balance outstanding. You have to first reduce the value of security and whatever is left on that you have to apply the ECGC percentage. So from unsecured portion, unsecured amount, that is C, if you reduce the ECGC cover available, that is D, that C minus D will be my uncovered portion, net unsecured portion. So I will apply what is my secured portion? On B. I will apply relevant percentage on B, 25% or 40%. And for unsecured portion, I will apply 100%. That will be E. That will be my unsecured portion. So now we come to the numerical part of it. A pre-shipment account, that is also a CC account. It is DB2 as on 31st March 21, has debit balance of 4 lakh. The primary plus collateral security taken together is 1.50 lakh. Calculate provision as on 31st March 2021. Now secured portion is how much? 1.50 lakh. Unsecured portion will be 4 minus 1.50, that is 2.50 lakh. And because it is DB2, so 40% of 1.50 lakh and 100% of 2.50 lakh, that adds up to 3.10 lakh. This will be my answer. Now, if in this case I have got a ECGC cover of 50%, what shall be the provision? Same question. So here my secured portion is 1.50 lakh. ECGC cover is, I will first reduce 1.50 from 4 book outstanding, 4 lakh book outstanding minus security 1.50 lakh. I will reduce it, and thereafter I will apply ECGC ratio. So ECGC cover is 50% of 2.50 lakh, that is 1.25 lakh. So unsecured portion is 4 minus 1.50 minus 1.25. So unsecured portion is 1.25. And because it was DB2, so 40% 1.5 and 100% of 1.25, it is 1.85 lakh is the answer. Now you see, if I was not having ECGC cover, the provision was 3.10 lakh. And if I having a ECGC cover of 50%, then my answer becomes 1.85 lakh. These questions 19 and 20, please revise them at your convenient time and understand this concept that ECGC or CGT MSE percentage is to be applied only after you reduce security value from balance outstanding. Now some general provisions are also there. Sometimes we make advances and we say there is a moratorium for payment of interest, like industrial projects or an agricultural plantation. Here moratorium is available for payment of interest. Payment of interest becomes due only after the moratorium or gestation period is over. Therefore, such amounts of interest do not become overdue, and hence such accounts do not become NPA with reference to the date of debit of interest. They become overdue after due date of payment of interest if uncollected. If after due date, if the interest is uncollected, then only they will become overdue, and thereafter they will become NPA. Similar case is in case of housing loan or similar advances granted to a staff member. Here interest is payable after recovery of principal. So interest need not be considered as overdue from the first quarter onward. Such loans advances should be classified as NPA only when there is default in repayment of installment of principal or a payment of interest on respective due dates. Because here the interest payment will start after repayment of principal only. So we can we can be clear by having an example. A project loan was sanctioned on 1st January 2018 for 30 crore with a moratorium on payment of interest installment for 15 months. For 15 months, neither installment was due nor interest was due. In absence of any repayment or interest, it will become NPA when there was moratorium for 15 months, means moratorium full 2018 and up to March 19. This will be 31st March 19. Moratorium is there. So first payment is due on 1st April 2019. First repayment fell due on 1st April 2019. So first overdue date is 2nd April 2019. 90th overdue date is 30th June. And overdue for more than 90 days is 1st July. So this account will become NPA on 1st July 2019. That the option B is the answer. Because there was moratorium for 15 months. If In case of default in payment of interest only, an account is classified as NPA only if interest due and charged during any quarter is not serviced fully within 90 days from the end of the quarter. It will be easier for us from an example. Okay. Suppose sometimes terms of sanction of a term loan provide for moratorium on repayment of principal, but for repayment of interest as and when due. Often we sanction loans mostly in real estate sector. We say that your principal repayment will start after 1 year, 2 year, or after construction is over. But during the construction period, you have to pay interest as and when due. So in such type of advances, principal's repayment has started, but terms of sanction say that interest is payable as and when due. So term loan, if suppose term loan debited during the quarter July 21 to September 21, he can pay this interest in the following quarter within 90 days from the end of quarter. That is up to 29th December 2021. My quarter ended on 30th September 2021. Within 90 days from the end of the quarter, if he pays the interest, there is no problem. But if he does not pay interest, then this account will become NPA. But this provision is applicable only when my terms of sanction say that the repayment of principal will start after construction is over, after the completion of project, etc. But interest is to be paid as and when due. So interest debited during any quarter, this must be serviced fully within 90 days from the end of the quarter. Classification of NPA is borrower wise, not facility wise. All the facilities granted to a borrower and investment in all the securities issued by the borrower at all branches of the bank will have to be treated as NPA or non-performing investment, and not only that particular facility. So suppose one account, say car loan, has become NPA in one branch of the bank. So other loans in this branch and other loans in other branches of that bank will become NPA. But this is known as principle of percolation. Because of one account becoming NPA, other accounts also become NPA. But this principle of percolation does not apply to advances against term deposit, NSC is eligible for surrender, Indra Vikas Patra, Kisan Vikas Patra, and life insurance policies. They are exempted, but only when such securities are primary securities. If primary securities are different and these securities have been taken as collateral securities, this exemption is not available. So another one question is, if one loan account of borrower at X banks at one branch Y has become NPA, then what is the possibility? Yeah, bank's name is X and bank X, one branch is named as Y. So which statement is not true? One account has become NPA. So his other loan accounts in branch Y of the bank X shall be treated as NPA even if running irregular. Same branch, it is the same branch of the same bank, his other loan accounts will be treated as NPA. I have marked a remark I have given, because those accounts against term deposit, NSC eligible for surrender, etc., there this principle of percolation will not apply. So all other accounts will become NPA. His other loan accounts in all other branches of the same bank will also be treated as NPA. This is also correct. Asset classification of his other loan accounts in other banks shall be governed by record of recovery at different individual banks. This is correct. Because if my account becomes NPA at PNB, the account with SBI is not necessarily, it will not necessarily become NPA. This percolation is applicable to one bank only, but all branches of one bank. For other bank, the percolation will not apply. His no other account anywhere will be treated as NPA. Now this is incorrect. His no other account anywhere will be treated as NPA. This is incorrect because his other account in other branches of the same bank will be treated as NPA. So answer will be D. For upgradation, if arrears of interest and principal are paid by the borrower in the case of loan account classified as NPA, the account should no longer be treated as NPA, may be classified as a standard account. So if the entire dues are paid, then it will be upgraded. The important thing is that when an account is a standard, if I restrict my overdues to below 90 days, I can prevent its slippage to NPA category. If 3 monthly installments are getting due, I recover 1, only 2 monthly installments are due. So this account will remain SMA category, but it will not become NPA. But once an account becomes NPA, we cannot upgrade by recovering only 1 month's installment. Here I have to bring overdues to nil category, not overdues to below 90 days category. A borrower visited branch on 22nd August 2021 and found that his NPA account with balance outstanding of rupees 10 lakh had overdues of 4.50 lakh. On the same day, he cleared his entire overdue. So on 22nd August 2021, this account will be standard. It can be upgraded. So we will not wait till the end of the month, that is 31st August. We will not wait till the end of the quarter, that is 30th September, or we will not end till the end of the financial year. On the same date, it will be upgraded. Appropriation of recoveries. Interest relies on NPAs may be taken to income account provided the credits in the account towards interest are not out of fresh credit facilities. If he has deposited money from his own sources, then this account, if such credits are there, interest, some recovery is there, then this recovery can be taken to interest income. The RBI guideline says, in the absence of clear agreement between the bank and borrower for the purpose of appropriation of recoveries in NPAs, banks should adopt an accounting principle and exercise the right of appropriation of recoveries in a uniform and consistent manner. For all types of borrower, we have to adopt same recovery sequence. It can be first expenditure, thereafter interest, then principal, or it can be first expenditure, then principal, then interest. So whatever criterion an individual bank adopts, they should be uniformly applicable to all borrower accounts. There cannot be any discrimination. Disclosure requirements. Banks are required to disclose the following as per formats prescribed by RBI in balance sheet: gross advances, net advances, gross NPAs, net NPAs, details of write-off, technical write-off, details of financial assets sold during the year to asset reconstruction companies, details of non-performing financial asset purchased from or sold to other banks, number and amount of advances restructured, and so on. These are the disclosure which are to be made in the balance sheet by the banks. This is important, friends. If I reduce standard assets from gross advances, I arrive at the figure of gross NPAs. So gross advances are standard advances plus gross NPAs. Gross NPA percentage, what is this? Gross NPAs divided by gross advances in percentage term. Net advances are gross advances minus deductions, provisions, etc. We will come to know what are the deductions. So to arrive at net advances, I have to make deductions in gross advances. Then net NPAs are gross NPAs minus deduction. Net advances are gross advances minus deduction. Net NPA percentage is net NPA divided by net advances in percentage term. On deductions, what are allowed? Deductions are provision, we all know, DICGC, ECGC claim received, part payment received and kept in suspense account, balance in sundries account, interest capitalization, restructured account, floating provision, provision in lieu of diminution in fair value of restructured accounts classified as NPAs and classified as a standard account. These are the deductions permissible. So, how we calculate gross NPA percentage and net NPA percentage, this should be clear to us. Effect of NPAs on profitability. We all know that once an account is categorized as NPA, we stop charging interest to it. So NPAs affect current profitability as well as future stream of profits. No, because why? Because non-recognition of income. We cannot take income on accrual basis. It is only on realization basis. Thereafter, we have to make provision. Not only my future income is stopped, but from existing income, from other advances, I have to set aside some amount as provision for the NPA account. Moreover, NPA and DB3 and loss categories, they attract 100% provision. And another impact on profitability is because I have to maintain higher capital on NPAs. My capital for purposes of capital adequacy, NPAs attract higher capital. Then reduction in profits bring fall in value of share. Obviously, the share value reduces. Blocking of funds and capital, because I cannot rotate my fund. These funds are blocked in my NPA accounts. If it is not recovered, then I cannot make fresh advance. And if my profitability falls, if my net NPA rise, then I expose myself to prompt corrective action of RBI. RBI monitors three things: capital, asset quality, and profitability. For capital, they monitor CRAR and CET1 ratio. For asset quality, net NPA ratio. For profitability, return on assets. For each of these three parameters, there are three thresholds. If breach is there, then every breach entails specified mandatory and discretionary action on the part of Reserve Bank. For example, they can restrict that this particular bank will not open fresh branches. They cannot pay salary beyond this limit to directors. They cannot undertake new lines of business. So there are many types of restrictions which the RBI imposes if bank reaches some threshold, three thresholds in capital, asset quality, and profitability. So my NPAs, they are very important. I have to see my NPAs within reasonable limits to escape from prompt corrective action of RBI. Friends, this was all which I wanted to share with you, discuss with you as far as this Unit 25 of BFM Paper 2 is concerned. If you have any question, you may ask now, please. Hello, Ajay sir.
Yeah, fine. If they want to interact, kindly interact. That's what we have to ask.
There was no disruption in between today?
No. Yeah,
Okay.
good.
Okay.
Yeah.
Sir, what is
Yes,
the difference between renewed and review?
Renewal and review. When the borrower does not submit all the statements, he has not submitted you the balance sheet, okay, audited balance sheet, some other statements also, then banks can make review of this review of such accounts also, they can undertake, but that review is valid for a limited period of time, and that review can be undertaken only for only a limited number of times between two renewal dates. Am I correct, Ajay sir?
Yeah.
Review means that operations in the account are okay. Operations in the accounts are satisfactory. Stocks are adequate. Turnover is adequate. The only thing is the borrower has not been able to submit his audited financial statements, his other statements. In that case, banks can review the account and permit operations for a limited period of time.
Okay, sir. Thank you.
All clear with the provisioning and all clear with the appropriation of recovery.
You will have question on provisioning, that is sure.
No, any more question likely from where there's a coverage for DACGC, ECGC and all. You should be very clear about that. There should be, we have already discussed that. Anything else you want to know?
Sir, erosion of security, that up to 10% and 10%, that once again, if you can just.
You see, when the value of security is eroding, suppose it is getting reduced, when it is less than 10% of book outstanding, less than 10% means 9.999%, then it will become loss. Now I will give you an example. Suppose your book outstanding are rupees 100, okay, your value of security is 10, this will not become loss. If it is rupees 9.99, it will become loss. It is less than 10%, okay. But in case of substandard advance, if my security was rupees 10 in the beginning, I made an advance. If their security was 0 or if the security was 10, I made an advance of rupees 100, security was 10, and this account becomes NPA, then this will be unsecured substandard advance, because there the words are not more than 10%, right? In case of loss, it is less than 10%.
Okay, sir. Thank you.
Sir, sir, just mention in unsecured substandard, what will be with the provision, sir? Or 25% is enough, sir?
In case of unsecured substandard advance, the provision is 25% for all other loans other than infrastructure.
Okay, sir.
For substandard loans, unsecured substandard loans in infrastructure sector, the requirement of provision is 20%.
20%. Okay.
Right? And in general substandard, it is 15%.
15%. Normal loans it is 15%, yes, sir?
Normal loans, it is 15%.
15%. Okay, sir.
1.5.
1.5. Okay, sir.
Please refer to your textbook. Please refer to other material wherever you can find, and make adequate practice of calculation of provision, calculation of date of NPA. You will certainly get quite a few number of questions on it. And this is helpful not only to this paper, it is helpful to your ABM paper also.
A doubt regarding doubtful assets, sir. Sir,
Tell me.
An account will be classified as doubtful assets if its secured portion comes down below 50% of...
No, like this, not like this, not like this. You see, an asset becomes doubtful because of two reasons. There can be two situations when an account becomes doubtful. There was full security, 100% security, more than required, but repayment was not there. This person defaulted in repayment. There were overdues. So when there are overdues more than 90 days, this will become substandard. And after 12 months of substandard period, it will become DB1. After 12 months of DB1, it will become DB2. After 24 months of DB2, it will become DB3. So security is intact. Security is 100% here. But just because of the borrower failed to pay the amount in terms of sanction, this account can become substandard and doubtful and onward. But there is a situation when repayment is okay. There is no problem in repayment. But security depleted. You finance for car, he has sold off the car. You financed a 2-story building, 1-story building, he has sold off. Right? In such a case, when there is a erosion of value of security, it has come down to below 50% of the value accepted last time. When you inspected stock, last time stock was 1 lakh rupees, and now the stock is 49,999. Then my stocks have depleted to by more than 50%. My present day security is less than 50% of what I accepted last time. Then this account will become doubtful straight away, whether or not operations are satisfactory, whether or not repayments are coming in due time. Okay?
So it will go directly to doubtful one, no?
It will go directly to DB1 category.
Thereafter, the classification is like 1 year doubtful 2, then 2
Yeah,
years.
then aging will continue as usual.
Okay. Okay, sir. Thank you.
Sir, apart from normal secured portion for calculating provision, why don't we include the secured portion of guarantee?
Guarantors.
Total
Guarantors,
for
look, guarantors net worth. This security, whatever the guarantor is having net means. Now this guarantors net means they cannot be attached without the intervention of court. We have to file a recovery suit. Only then we can make guarantor to pay. But if there is some guarantors, house is mortgaged to the bank as collateral security, we can invoke SURFACE Act. We need not go to the court. We can realize our dues from.
I'm not asking about guarantor.
Let me tell you. From primary and collateral security, they are specifically charged to the bank in respect of this particular account. But guarantor's net worth is he is having jewelry, he is having house, he is having so much agricultural land. We calculate net worth. This is not specifically charged to this particular account. So for calculation of this provision, guarantor's net worth is meaningless. Only the security which is available specifically to this account in the shape of primary security and collateral security, this is to be taken into account.
Sir, the secured portion given by ECGC that we don't take under provision for provision calculation.
No, we do not take. Secured portion is only primary and collateral security. From book outstanding, we reduce our secured portion. Thereafter, we apply ECGC percentage. Now, ECGC percentage is neither in secured portion nor in unsecured portion. Against ECGC cover, we do not make any provision. Okay?
Okay.
We make provision against the primary plus collateral security, and we make provision against the unsecured portion. That is arrived at after reducing security value and after reducing ECGC coverage. That is my unsecured portion. Against the ECG, against the portion of book outstanding which is covered by ECGC, this does not attract any provision.
Okay, sir.
Sir, one more doubt regarding agri loans.
Yes.
We have given a loan to purchase agri machinery, and the installment is due on EMI basis. Every month it is due. Even then, the classification will be based on crop season, right?
For classification purpose, you will have to see whether there are overdues for more than one crop season or more than two crop season.
Okay,
because this is an advance for agri equipment, and this is included in RBI guidelines. where the crop loan criterion will apply.
Repayment condition is not relevant here, right, sir?
Pardon me?
Repayment, the installment, the interval or the frequency of installment is not
No,
relevant.
this is true that you have to say, do you say that it is payable on monthly basis? No doubt. But you will always find overdue if their overdues are more than one crop season or overdue more than 2 crop season. The criterion for classifying as NPA will be only that.
Okay, and it is not applicable for allied activities. It is strictly for agriculture, direct
For
agriculture.
agriculture activity only. Allied means dairy, fishery, no.
Okay. Okay,
But plantation, horticulture, yes.
horticulture, it is available.
Yes, it is a yes. It is yes. For even for if the you have given some advance against the pledge hypothecation of a pledge for agriculture produce, it is applicable.
Okay. Thank you, sir.
Agarwal ji,
Yes, sir.
Thank you very much.
It was my pleasure. I had a
And